Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a trade setup that we were looking at in our MTPredictor customers webinar yesterday that did not unfold as anticipated. And I think it's always important that developers and software gurus always include trades that don't work out as anticipated. Remember, we need to look at the bad and the ugly as well as the good in the trade setups. But before we look at the charts, just to remind you in our risk disclaimer that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold, no matter what trading approach you have for the markets. Right, this was the trade setup we were looking at in yesterday's customers training webinar, and it was this TS4 Wave 3 trade setup here on the 5-minute E-mini. So if I go back to at the time, this is what it looked like at the time. As you can see, it looked to be a good trade setup with our MTP trending red, and we had a sell setup there. And if I just turn trading mode off, for you guys who've been with us for a while, we know that we don't use MTPredictor as a black box system where we just blindly follow all our trade setups, perhaps in the direction of our MTP trend color. We also look at the higher time frame chart. And what we looked at was the 15-minute chart for the higher time frame trend, and we went back to the previous pivot high, which was here. Can you see I'm circling that here? We right mouse click, do decision point, and that gave us an area of resistance. Now that area of resistance was on our charts before yesterday even opened. So before the market even opened, well actually before the previous day opened actually, because this was on the day before, that was providing an area of resistance. So if I now come down to the 5-minute chart, you can see what this looked like. Here we were with our 15-minute resistance, nailing the high of the day before, which was July the 1st. The market came down. It actually came down in a 5-wave sequence. If I do the Elliott waves here, it's a bit of a choppy, messy 5-wave sequence, but it was a 5-wave sequence. We then had an ABC correction up into our TS4 W3, that's a Wave 3 trade setup. So at the time, this looked to be a good trade setup, and this is what we're looking at in our webinar yesterday. So if I do right mouse click and do analysis, this is where our trade was suggested, or this was the setup that was suggested by the software. Remember, we use correct position sizing to keep our initial risk small under control, in this case less than 2% of a sample $20,000 account. Remember, you can set up different size accounts in MTPredictor to take care of your position sizing if you've got different size accounts. So for example, if you've got just a $10,000 account, it adjusts the position sizing to take account of that. So I just want to go back to our default account. So initially this was suggesting a potential Wave 3 decline, and if it had have got down here, this would have been a good profit, approximately 11 times the initial risk. But the whole purpose of doing this this video is to show a trade setup that obviously did not unfold as anticipated. I don't know about you guys, but I never like it when software gurus and vendors only ever show great, brilliant trades that always work out as anticipated. That's not the way real life happens. Markets don't always go the way that you anticipate, and sometimes, as an example like this, it reverses and goes against you. So let's look how you could have managed this. Well, for you guys who've been following us for a while, if I just clear this off, you'll know that I talk about using the DP from the last swing into the high or low. So in an ABC correction, which is what we had up here, which is what a TS4 is defined as, an ABC correction, the last swing into the high, into the wave C high, is the wave B. So I'll just take this back to around about here and perhaps move forward a little bit. So if you're in a trade setup and it's starting to go with you, the first area of support or resistance, in this case support, would be the DP off the wave B swing. In other words, it's the DP off the last swing into the high. So I'll right mouse click on this low, do a DP, and this gives you an area of potential support. So it's an area where you want to look for potential change in trend. Now this is not the main targets, because if I place the analysis on, the main targets are right the way down here. Then is the DP at the new low. So these are the main targets, but this is an area of where minor support or resistance is possible. So if you go forward, you can see the market starts to decline really nicely. It just about tags it there, just about hits that level there. It then comes back up again, and then goes to that level, and then makes a TS4 setup. So it makes a buy setup in the opposite direction. So there's a couple of things you could have done here. When it first tagged the level there, you could have perhaps started trailing at your ATR, which is our red dots here. So perhaps to lock in a small profit, which would have been what, a 0.4 hour profit, or particularly as this was the day before a holiday, or the day before a holiday, I should say. This is was actually July the 2nd, so the the Independence Day holiday was due to be coming up on the 4th, so we're getting close to a holiday. You could want to perhaps say, let's start trailing this just above the bar highs. The reason for this is because you're now locking in a small profit because you are at an area of potential support. So if the market was going to carry on down, it would keep on going through that, and then you could relax the stop. If not, you could then protect a bit of profit. And as you can see, that would have then come out with that small 2-point profit. If I turn trading mode off, you can see that would have been a good decision because the market rallied on up after that. So this is just an example of a trade setup that we were looking at. Did start to go with us, but then made a reversal and went right back up. I just want to show you that with the tools in MTPredictor, remember we're not just a black box system, and this is what we want to try and show you, is that we have tools in the software that allow you to do your own manual analysis within the market environment. And one of the tools that we look at very often is the DP, and particularly the DP of the last swing into a high or low. So that's the high, this is the last swing into the high or low. So this DP is an area that you would have had on the chart in advance. This would have been on the chart in advance before the market even got there, warning you that was an area of potential support. So in this particular example, if you were short of this, you could have used that area to perhaps start to protect your profit, your open profit on this particular trade, by either perhaps using our ATR stop, which is our red dot. So if you had have done, you'd have been stopped out about here for just basically a 1 hour profit, or if you'd have brought it a little bit closer and perhaps trailed just above your 1 bar highs here, you'd have locked in just over 2 hour profit. But the point being is it allows you to manage a trade when you are in an area of where a reversal is anticipated. So anyway, hopefully that's a good example of using MTPredictor, in particular on a trade setup that looked good at the time but did not quite unfold as anticipated. And I think it's important to show examples like this, or real world examples like this, where trade setups do not go as anticipated.